Welcome to Multifamily Insights. I'm your host, John Casman, and today we've got a fun episode. We can't wait to jump into it. Now, before we do that, if you haven't listened to the show and this is your first time checking us out, well, welcome. Be sure to hit that subscribe button so you don't miss another episode. And if you're an avid listener of the show, be sure to subscribe and also leave us a rating and review so we can learn what you love about the show and how to make it work harder for you. Today, we're talking to Patel. Patel has been a full-time commercial real estate investor for over 10 years. Now, he is a value-add investor and has purchased retail, warehouse, office, industrial, land, mixed use, medical, and restaurants. Let's welcome to the show, Patel.
Hey, John, how are you?
Hey, I'm doing great. I went over your bio at a very high level. Take a minute or two and give us a little bit more context on your background.
John, I went through the typical corporate career. I was an IT manager for 13 years and always had a side hustle throughout those years. Started a web design company, a marketing company, a sports supplement company, and some of them were successful, some of them failed. But it wasn't until I found real estate that I found my calling, and I dropped everything that I was doing, quit my career. At the time, I had an IT consulting company, quit that, and went full-time into commercial real estate.
Well, there you go. So what was it about commercial real estate that stood out from all the other ventures you were into?
It's a good question. I think it was the fact that it appeared to be passive, but you had the ability to make exponential returns on your money. And my first property was a mixed-use building. So apartments over a grocery store / beer store and a college campus. And I was able to see the differences between residential tenants and commercial tenants. And I saw that commercial tenants improve your property. And that blew me away, right? It wasn't the residential landlording that attracted me to real estate. It was the fact that commercial tenants will take whatever property you give them and improve it on their dime often. And that blew me away that, a bank is going to give you a loan to buy a building and this other person is going to fix up your property on their dime. Seemed like the greatest thing ever.
Yeah, let's dive into that a little bit more because that's a great concept and one of the big differences between, residential and commercial. And in this case, when you say residential, you mean a tenant. So whether the building is commercial or not, you're talking about someone who's living there versus someone who's running a business out of the place. So talk to us more about some of those key differences between residential and commercial.
Okay. And just for the record, you're correct. When I say commercial, I mean non-residential commercial. I know in your world, it's anything 4 units or more, right? Or 5 units and above. Mm-hmm. Yeah. So again, keep that in mind as I say the word commercial. The difference between the two sets of tenants, residential tenants will wear and tear your place up. They require a lot more overhead. Commercial tenants are business owners that don't have showers. They don't spend the night there, less wear and tear. Less plumbing, and they're business owners. They take pride in their space that they're renting from you. They often improve it. And depending on how your lease is set up, they could be responsible for the roof, the furnace, all of the mechanicals, parking lot, lighting. Or it could be a gross lease where the landlord is responsible for everything. And then you have the whole gamut of everything in between. So depending on the lease, it'll determine what the landlord is responsible for and what the tenant is responsible for.
Yeah, so there are a lot of advantages, right? You just talked about the fact that the commercial residents, they're not living there. There's less wear and tear. You're not getting a bunch of calls about, clogged toilets, at least hopefully you're not. But those kind of things, you're not dealing with all the applications and everything else that comes with it. And typically they have longer leases, so you have longer leases. And to your point, they're running a business out of there. So they have to take some pride of ownership into the space that they create. And the key thing that you said was they're actually making the payments. They're paying to improve the space versus on the residential side, when you have someone who's living there, you as the owner are going to pay for any renovations or improvements. So that is a huge advantage if the residents are paying for these things. Obviously, there's got to be some drawbacks, though. So maybe highlight some of those things.
We will highlight the drawbacks, but I want to overly emphasize the benefits of commercial. So you mentioned toilets, right? Most of my leases have a minimum, even if they're gross leases. The first $150 of plumbing, electrical, or HVAC repairs are on the tenant. So if there's a clogged toilet, clogged sink, it's on them. You never even hear about it. The longevity of their leases, they're often 1, 3, 5 year leases, sometimes 10-year leases. And they're guaranteed. They're either personally guaranteed or there's a corporate guarantee on the lease. So a lot of multifamily people that suffered during COVID and had professional tenants and still deal with that, and they can't get these tenants out. They're not paying, they're trashing their place. Like that would eat at me, right? Knowing somebody's living in a property that I own and I know they're just destroying it every day. That really would eat at me. So with commercial tenants, they have guarantees. And if a commercial tenant is unable to pay their lease, the writing is on the wall. Their business is not working. So you go in there and see if you can find a solution, or you collectively try to find a replacement tenant. There's rarely ever the eviction where the tenant continues to stay, but they don't pay. If they have problems paying their rent, they're going to have problems running their business and keeping their business afloat. So they're going to leave, right? And because of that guarantee, they're going to want to work out something that's amicable to everybody. So the downsides, it's harder to fill vacancies in apartments. If the demand is high, people will settle for whatever they have, right? They need housing. It's a necessity. With commercial space, depending on the economic cycle, where you are in it, it could be harder to fill vacancies, which is why you have to make sure you purchase these properties correctly, knowing that you can endure several months of vacant spaces or an entire vacant building. Um, Drawbacks, what else do you have? That's the big one. Another positive is the ability to increase NOI and in turn drastically improve the value of your property. So again, with apartments, you guys can um, improve the common areas, improve some amenities, put a dog park, covered parking, and you can marginally raise their rent because of all of that. With a commercial tenant, let's say you have a block building and all of a sudden Dollar General wants that location. If they come in, that building, that land that was worth 300,000, land and building together, could now be worth 1.1 to 1.3 million dollars simply because Dollar General signed a lease. It's not that they pay more than everybody else, but they have a very strong corporate guaranteed lease. So the person buying that property can park their money for 10 years, knowing the only way DG is getting out of that lease is if the entire corporation files for bankruptcy.
Yeah, it's a great point there. You talked about and understanding really the value add component, and I like the way you compared what happens in multifamily versus this space, because in multifamily, as you stated, there's something you've got to do to drive that NOI. You've got to make some improvements to the units so you can increase rents. You have to figure out, what amenities you can add to the property. You're ultimately trying to drive the NOI. In the commercial space, simply by the caliber of the resident or the tenant that you get here, the commercial tenant, that can increase the value of the property. One, you mentioned just the leases, and I want to come back to that, but you're now getting these guaranteed leases that are backed by corporate. That also makes it more attractive for the other residents or tenants, because they know they've got an anchor tenant here who's going to help drive traffic, and that traffic is more likely to shop at other stores as well when they're in that complex. Let's talk a little bit more about the leases, because I think that is such a unique component, which is always a little bit interesting to me, because those leases are so important. I think when you buy apartment buildings, most of the time you're looking at people who are on a 12-month lease. Maybe some of those have gone month to month, but in the commercial space, those leases are critical. What are you looking for when you are looking at a new opportunity and you're going over those leases?
Good point. And those leases are everything. And each lease is different. right? So anytime you are doing due diligence on a property, you have to read the entire lease, every provision, and at times they could be 60 pages long, but every little nuance in there matters. There's some leases where they have a sight line exemption, where if you have a large strip mall, you can't build an outlot in that parking lot because your anchor tenant wants a free sight line to whatever interstate or busy road is in front of the building. There's all kinds of stipulation on rent, how renewals are calculated, and literally every lease is different, right? So you have to evaluate it on a case by case basis. But I want to circle back, and a lot of multifamily, a lot of residential investors often have blinders on and they think commercial is too expensive or too difficult. And what I try to encourage people to do is dip your toes in the water by buying a mixed use building, right? So apartments over commercial. And that gives you the the safety net of having apartments that are easier to rent. And they often will pay the mortgage on the entire building. And whatever you rent the commercial space out for is just profit, right? So these mental barriers, I want to try to overcome them for your listeners, because commercial is not more difficult than multifamily. It's just different. Lenders are a little bit different. You have to find the right lender for the right property. So big banks will not finance value add commercial properties like they would value add multifamily, in which case you have to find local lenders. So there's just a lot of different nuances to commercial, but those mental barriers to entry, the fact that there's no textbook formula on how to evaluate commercial property, it's literally just diving into the leases because they're all different, right? Um, and those are the barriers that keep a lot of people away from looking at commercial property.
Yeah, you just hit on it, right? There's some barriers. I know a lot of people have these challenges, and when I was in Chicago, you're talking about a lot of those spaces where you might have six apartments up top and two or three stores at the bottom, and trying to figure out how you value those opportunities. That was a challenge for a lot of people because these are smaller stores, right? As well, it's not like it's the Dollar General or the strip center. Now you're talking about maybe a hair salon or someone who has a CPA office or something like that. So it's always a little bit more challenging figuring out how to evaluate that. But I love your point because mixed use is an easy transition. You get the apartments, that's something that but if you're interested in expanding your portfolio, by starting with mixed use, you get kind of the best of both worlds. You can learn a little bit more, you can figure out some of those nuances, and you can actually grow from that experience. For someone who is looking to get started maybe with mixed use, or really just starting to go down this pathway, are there any rules or any shortcuts, anything that everyone knows from a 101 standpoint when you are looking to invest more in commercial?
A lot of similarities to multifamily. Find a partner, right? Find somebody more experienced than you are. But when you're evaluating a commercial space, look at the comps. Find out what other mom and pop tenants are paying for a similar size space, similar location, similar age or condition. So not much different than multifamily, right? But mixed use, again, look for something where the apartments essentially pay your expenses.
There you go. And that's a great way to protect yourself. And like you said, at the minimum, if you know that you can cover your expenses and your mortgage, the rest of that is upside. So that gives you a little bit of flexibility there.
Yeah. And John, one more thing with mixed use, apartment guys don't want them because they don't want the commercial part of it. The commercial guys don't want them because I don't want to deal with the apartments. So they often fall through the cracks, right? Lenders hate them for whatever reason. So if you find a mixed use building, you want to find a local lender that will give you the loan on there. Big banks just won't touch them. Even a lot of credit unions, small banks, they hate mixed use buildings. So yeah, go ahead.
No, I was just going to say, I think that's a phenomenal point because I think that's the thing that holds a lot of people back from mixed use is they prefer either an apartment or they prefer a commercial property, and this mixed use space is almost no man's land. So with that said, I think it's an opportunity for investors today. If you're looking for deals and looking for opportunities, well, sometimes you want to go where there's a little less competition. So this could be a great place. On the flip side of that, how do you kind of evaluate the exit or the back end of this if demand kind of waffles a little bit from that standpoint?
So I never have an exit plan, and I had a partner years ago on an office building, and he's like, "What's our exit plan?" And I try to think of an intelligent answer, and I stumbled my way through some nonsense answer. But at the end of the day, there is no exit plan. You do whatever it takes to make it work, and that's it, right? So you have to get this place rented. If you have to pound the pavement every day to find tenants, you do it. There's no exit plan that involves you not winning, right? You're not going to take it on the chin, accept defeat, and leave. You're just going to make it work at all costs. That's it. So I don't have exit plans.
There you go. Well, we've talked about mixed use, right? I know that you've done a lot of different stuff, right? In the intro, I talked about office and a little bit of commercial retail and so many other things, medical. Talk to us about some of these other landscapes, right? Is everything really the same? You just look at the leases and you go from there, or there's some nuances with industrial and some of these other places that you really need to understand before you dive into it?
Each asset class has its own nuances, and then they recover differently depending on where you are in the real estate cycle. So industrial was the last to recover, but right now it is on fire. Everybody's looking for warehouse space, logistics space, manufacturing space. So with industrial, you want close proximity to interstates. You want proximity to a workforce. You want to be away from zoning restrictions. So you want to be, on the outskirts of town where they're not going to mess with you for having semis in your parking lot, for having barbed wire fence, pit bulls in the backyard, right? With medical, obviously you want ease of access. So a lot of older people will not make left turns unless there's a signalized intersection, right? So that also applies for certain restaurants that cater to older people. If there's a busy road and they can make a right turn, awesome. If there's no easy way for them to make a left turn without a traffic light, it's a problem. Medical, you just proximity to other specialties or hospitals helps. Proximity to the population demographic that you're serving. Retail, you want to be away from dense retail. So if you look at where your Whole Foods and Starbucks and your TJ Maxx, your Kohl's, your JCPenney used to be, those very densely populated retail centers where there's millions of square feet of retail and you never know what's there because new things pop up all the time. You don't want any part of that because you're susceptible to economic downturns. You're susceptible to comp pricing. So if the strip mall next to you is offering a much lower rate per square foot, you have to match that or you're going to remain vacant. So retail, I love suburban retail, suburban office. COVID amplified that where we no longer went to city centers. We didn't go to downtown Cincinnati. We went to whatever the closest suburb was. We went to the restaurants, the bars, the music venues that are closer to home. And because of that, those places started blowing up. So now even giant corporations are reassessing their downtown offices and they're not renewing their leases, but instead they're opening multiple suburban offices. So before everybody, millennials wanted to be downtown. That's where all the action was. It's where the new trendy restaurants popped up. And now it's moved out to the suburbs. And even further, you're looking 30, 40, 50 miles away from city centers because now, like you said earlier, before we hit record, people want land. People want backyards, right? So it's amazing the boom that's going on in the tertiary markets outside city centers.
Yeah, there's a lot of growth, and it's interesting too because I think people miss that a lot of millennials and younger people are actually getting older and marrying and having children and living in the suburbs and looking for more land, and that's kind of what we were alluding to earlier in the conversation. And as that's happening, well, guess what? Their tastes are similar. They still like those restaurants. They still like to go out. They still like to have a good time. And if they can do that in their new suburban home or a suburban neighborhood, as opposed to having to trek downtown, that makes life a lot easier. So as we're seeing that come into play, a lot of those companies, the retailers, the nightlife, that's starting to pop up, and it's easier to retain those individuals. And I think it's really interesting watching all the dynamics come into play. Not to put you on the spot, but you did start talking about kind of, the downtown office buildings. And I just find it really fascinating that there's people who believe that, those office buildings in the urban core will come back. Some believe that, they will never come back in the same capacity. As you're looking at it from an investing standpoint, what are you seeing?
I haven't met anybody who thinks that downtown office buildings are going to come back. There's a debate on whether large suburban offices are going to come back. How long are people going to continue to work from home? But the way to play that, and I would like to think that suburban offices will come back. My personal opinion is people are figuring out they can't work from home effectively, right? Summers, you have kids home. How can you really be as efficient as you would in an office? A lot of these Wall Street firms have realized people are not collaborating the way they would in an office around the water cooler, going out to lunch with colleagues. So personally, I think suburban office will come back. But the way to play that is right now you're seeing lenders start to foreclose on a lot of office space in the suburbs. So when you can go in and buy them at 30 cents on the dollar, that's the way to play it. If you can avoid office buildings with elevators, even better. So 1, 2 story, if you can have them in a walkable neighborhood, those are on fire, right? An office building that you can drive to, you don't have to go through a parking garage. You park right in front of the door and you could walk somewhere for lunch and it's 5 minutes from your house. That's what people want. And a lot of corporations are allowing people to work at any office. It doesn't have to be their corporate office. They just don't want you at home. They want you in an office, right? So I think you'll be able to get office space at fire sale prices, and people should look into that. It's already happening.
Well, there you go. If you're looking for an investment opportunity, look into suburban office. That's where there seems to be some great opportunities today. I want to go back to one other thing that we talked about, and we were really starting to get into the a comment you said earlier, and you said that one of the things that really jumped out to you about commercial real estate was that it was more apparent, it was apparently passive, right? And there was an undercurrent that maybe it was still a little more hands-on than you anticipated. We have a lot of investors who are looking to be limited partners and looking to be passive investors, and a lot of our listeners are looking to be passive. So if they're looking at investment opportunities in the commercial space and looking to be more hands-off and really being passive, what are some of the things that they should consider that may differ from if you're looking to be the active manager on one of these properties?
And I'm glad you picked up on that nuance. Being active initially was part of my learning experience, and a lot of it was me being my own worst enemy. COVID taught me how to put systems in place to where I would buy properties sight unseen. I could remotely manage them because we moved out to a little cabin on the lake during COVID and just kind of were secluded. So it forced me to remotely manage all these properties. So you can put systems in place or you can be as active as you want to be. If you want to passively invest in retail, partner with somebody that's doing it, right? You could buy into REITs and different vehicles, but you don't get all the benefits. You get higher expense structure. You don't get the tax benefits, the depreciation. So really just partner with somebody in that space and you can make it passive.
There you go. If you find people there, that's the way to partner. And you made a post on LinkedIn not too long ago that I thought was really interesting. And it was, I believe there was an office complex that you either worked in or something like
Yep.
that. And you wanted to come back and actually purchase that. Tell us a little bit more about that story.
So this was 400,000 square feet that was anticipated to sell at auction for around $5 or $6 million. So, I mean, you're buying this for less than $20 a square foot. And we know build cost is well over $100 a square foot right now. It was probably 20% occupied, 80% vacant. It was just a mismanaged property for many years. The lenders had tied the owner's feet together. They wouldn't allow him to sell off any of the properties. It was 13 buildings. If he was able to sell some of them off, he could have stayed afloat and just turned things around. Nonetheless, it was an incredible opportunity. There was not a lot of people bidding on it, and the property ended up selling for $10 million, which is $25 a square foot, right? Still a steal. Somebody will make a lot of money on that property. But, and that's kind of what I look for, is either mismarketed or mismanaged properties. So mismarketed, you find a residential realtor marketing commercial property. They often misprice it because they're not in that space. It's not their forte, right? So you literally search for residential realtors, and when they list a commercial property, you can often find a great deal on that. Mismanaged is absentee owners, or when you see a strip mall that has a fair amount of vacancy in it, find out who owns it. If you see an office building that has a for lease sign on it, call them, ask them if they're interested in selling, right? So there's a pain point if there's a for lease sign out in front of a property. So follow through with that, right? People rarely do that with commercial buildings. All of you wholesalers out there, you guys have incredible systems in place. Why aren't you deploying those systems in commercial? John, for over 10 years, I've owned commercial property. I've gotten one postcard ever that said, "Hey, I'll buy your building. I'll give you a fair offer for it. Buy it as is." And I knew that it wasn't a mistake, because instead of "I'll buy your house," it was "I'll buy your building." So some wholesaler out there, 1 in 10 years, hit me up, right? So
Oh,
it's a great opportunity for wholesalers to get involved in commercial as well.
well, and like you said, I mean, it's unlike residential. With commercial, you can pretty much see the pain point without seeing any numbers. If you drive
Right.
by and you see a for lease sign in the window and there's no one occupying it, especially depending on the size of the property, but you can quickly calculate, how much income they're coming, they have coming into the property. So at a minimum, that owner is open to options. They're looking for a lease, but maybe they are interested in at least having a conversation and entertaining that notion. So definitely worth it to engage in a dialogue there. And to your point, from a marketing standpoint, if you like driving for dollars, or if you want to find some other means to go out there and kind of create this list, it's a great way to do that. So if you're looking to get into commercial, really expanding what your opportunities are, this is an excellent way to get going. Last question here. We haven't talked about commercial brokers, right? We've talked a lot about, we get the multifamily brokers and how that works. When we talk about really finding these opportunities, you mentioned properties that are mismarketed or mismanaged. Obviously, there are a lot of properties that are also listed by commercial brokers. Is there anything different when you approach commercial brokers to kind of build that rapport or to find opportunities that we should keep in mind?
Yeah. For me, commercial brokers won't ever give me deals because my minimum is 30% cash on cash return. Right. So if you call the commercial broker and say, "Hey, I'm looking for a 30% cash on cash return," they're going to tell you that doesn't exist. And it does. So even commercial brokers will miss market deals. We're buying a 100,000 square foot strip mall. It was marketed by a pair of commercial brokers. They're a team. These guys have been in the industry for 30 years. They thought it was a great idea to market it on their website and nowhere else. So the only way people would have found that is if they drove by and saw a little for sale sign on a giant strip mall, or if they happened to go to their website, right? And these guys, again, it was just mismarketed. So you can find those opportunities. right? Even
Well,
with
there you
commercial
go.
brokers. Yeah.
Yeah, it's crazy, right? But those are great ways to find deals, right? Sometimes it's more about finding one of those things, right? Something that's mismanaged or mismarketed, as opposed to just trying to crunch numbers and seeing if you can make something work. But if you can understand, hey, how many people are looking at this? What opportunity can you create? Understanding really the market and digging down, that gives you a nice competitive advantage.
Yeah. And that's all we do is we chase unicorns, right? We try to find unicorns. We don't want to just park money for your 15% cash on cash return.
There you go. Excellent stuff there. Ash, how can people get in touch with you and learn more about what you're working on?
Pretty active on Facebook, somewhat active on LinkedIn. You can email me. So Facebook, just Google Ash Patel Cincinnati. You can email me at Ash, B as in boy, Patel at gmail.com. Bigger pockets as well.
Awesome. Let's go to a round of insights. First question. Give me a failure or an apparent failure that sets you up for later success.
Um, I started investing after the 2008 crash. So for several years, anything you buy would turn to gold, right? And then people would say that they're like, wow, man, everything you touch turns to gold. And I got a giant ego and I actually believed it. So me and a couple guys, we went into this small town that had been ravaged by drugs and job losses, but a beautiful Ohio river town. And we ended up buying over a dozen buildings at auction. And our goal was to turn these things around, and that didn't work. We got slaughtered, right? But it was a humbling experience, and I needed that to learn. Don't just throw money at things and buy deals and anticipate that they're going to turn around. Not every deal is going to win. So that was a great lesson. Gave me some shell shock that I needed, and deflated that ego.
There you go. All right. Give me a digital or mobile resource you recommend for your business.
A digital or mobile resource. I'm going to say my executive assistant. She's neither, but she's here next to me and just phenomenal. So, that was a pain point for a lot of years. Hire an assistant. If you guys are on the fence, if you're inundated, hire an assistant.
All right. Give me the book you've recommended or gifted the most in the last year.
Who Not How, game changer in dissecting everything that you're doing and making your time more efficient. That's the one that I've read and recommended the most. The one that I've gifted the most is Making It in Commercial Real Estate by John McNellis.
There you go. Give me a daily habit that helps you stay focused on your goals.
I don't have any. For years, I've wanted morning routines. I've tried meditating. I am scatterbrained. If you look at my desk, it's insane. But I think that's what, to some extent, helps me, right? I don't focus on a niche. That squirrel syndrome will allow me to look at residential, office, land, whatever. So I shoot from the hip a lot.
Well, yeah, it also probably gives you the chance to come with fresh eyes for every opportunity, right?
I would like to think so. And that could just be an excuse, but yeah, we'll go with that.
There you go. All right. Give me your number one insight for investing.
If I can go back in time, I would tell my younger self, go bigger, faster, partner with people. And those are the two keys: go bigger, faster, and get the right partners.
There you go. And you're in the Cincinnati area. Give me the best place to grab a bite to eat.
Tony's Steakhouse, one of the best in the country.
All right. Tony's Steakhouse it is. I have to put that on the list. I have not been there, so we have to check that out. Ash, you gave us a lot of great information. I really like how you took us to, the commercial space, letting us know what you like about it, how it differs from residential. And really, you gave a great insight on if you're looking to get started, mixed use may be a place where you want to cut your teeth, not to mention paying attention to Suburban Office. Those are two great opportunities that might be really fruitful for many of our investors who are looking to get started today. And again, if they want to get in touch with you, they can find you on Facebook and LinkedIn, as well as Bigger Pockets, or shoot you an email. I believe it was ashbpatel@gmail.com, right?
Correct.
Excellent. Excellent. Ash, hope you have a great day. Thank you for coming on the show. We look forward to staying in touch.
It was a fun show. Thank you.